It's Market Day Report, and as we approach mid-morning, let's see how the corn market is shaping up. We've been in the red and stay there, down 428 and a quarter. That's on the December contract, and the deferred's mostly 2 cents lower as well. Corn market down nearly 9% year to date, but soybeans year to date down over 23%. January, 983 and a quarter. It's down 7 and a quarter cents, 9 cents lower on the March. It's at the bottom of the trading range at 990 and a half, now a tick above the day's low. Over in the wheat market, wheat has struggled as well this year, down over 11%. With July, Chicago down a penny, 588 and a quarter. Hard red, July contract off 3.5. 584 and a half. That's a penny off the day's low. And in Minneapolis, December contract is a half penny lower, 591 and a half. Though we are seeing a couple of ticks higher on March, May, and July contracts. Cotton market has been off 13% this year. That is year to date. And December entering first notice, 68.31 off 15. March is the most active. 69.92, it's down 36 points and 2 points off the day's low. Ted Seifried's with Zaner Ag Hedge. Okay, Ted, what are you watching?
Yeah, we started the day lower and we've just been kind of sitting, wondering to see what happens here. Look, this week has been a bit of a tug of war between the the grains and the oil seeds, right? If you look at wheat, although we are down today, actually everywhere, wheat's up 15 cents for the week. Corn's up 4 cents for the week. Beans are down 14. Beans are the ones that want to be the heavy and lead the way lower. We're really flirting with that 980 level, which has been a very contested level. I mean, we keep scraping the bottom of the barrel here, Tony. If we eventually get a solid close below 980, you get the feeling that beans are ready for a bigger leg lower. We hope that's not the case. We hope beans hold here and bounce back, led by corn, which acts like it wants to go higher. Yeah, it's down 2 cents today, but as I said, we're still up 4 cents per week, and that's after a stronger day on Friday anyways. So it's a tug of war. I feel like the markets are a bit indecisive of what they want to do. That makes traders very indecisive as well. So we have this sort of trappy trade. And like I said, I mean, you got beans wanting to go lower and wheat and corn particularly acting like they kind of may want to go higher, and seasonality would be such that we do kind of rally into the end of the calendar year from here. Now I can also argue or make the argument that we put our harvest low in early. For corn, that was August 26th. For beans, that was August 16th, and we've had a pretty decent rally. At corn from lows to highs, that was 50 cents. That matches the typical post-harvest rally that we'd have. And in a year where we were very dry at the end, we harvested early and we harvested very quickly. Well, it would make sense that post-harvest rally would be early, and therefore the highs in that rally would be early. So look, everybody's kind of searching for some direction here. I don't know if we'll see that until after the Thanksgiving holiday, but we are poised for some breakouts here, Tony. And I'm just not sure which direction, because you have conflicting charts going on between beans and corn in particular. Last thing, we had export sales this morning. They were really pretty good for beans. They were above expectations, yet we're garnering a negative response from the bean market. That's not a great sign. For corn, they were decent numbers, but they weren't as big as some of the numbers that we had been seeing, and it was towards the lower end of expectations. And wheat was actually pretty good. But either way, you've got lower markets across the board.
Yep. Ted Seifried's with Zaner Ag Hedge. Hang on. We'll come back. We'll talk livestock futures. Market Day Report continues in a moment. Live cattle futures here at mid-morning, trading in mixed territory. Let's go to the big board as December down a half buck at 185.80. February down 4 dimes now at 187. Make that 42 lower at 187.50. We are seeing a bit of strength out in the June contract, but just a dime higher. Again, cash sales in the north, 185, dressed at 290, but fairly light trade yesterday. November feeders, 255.02, that's up 22. January, 252.90. That's up 57, and we're seeing a 57-cent gain on the May contract as we roll out at 253.32. Hog trade, 19% higher this year to date, and December is building on that at 80.67, up 15. And again, the June contract's been as high as 99.52, trading 99.45 last check, up 32. Let's bring back in Vice President Zaner Ag Hedge, Ted Seifried. Okay, Ted, what's happening in the proteins?
It's a pretty quiet day, Tony. We are a little bit higher in the hogs and a little bit lower in the cattle. Cattle continue to sort of take a little bit of a break from the stronger trade that we had seen, really led by feeder cattle. Friday, Monday, Tuesday, kind of simmered down on Wednesday, and now we're just kind of back and filling a little bit here. As you said, cattle on feed report. So there might not be a whole lot of activity through the end of the week until we see what the cattle on feed report is. A lot of times, by the way, there is profit taking and or exiting of long positions from the funds before cattle on feed, so maybe a little bit lower. I don't know. But for cattle on feed, we're looking for numbers, on feed numbers, to be a little bit lower than last year. But the big show on this one, I think, is going to be placements. Trade's looking for like 104% year over year, which would garner a better outlook for that supply situation in the longer term. We shall see. That comes out after the close, so that'll be something to trade and talk about on Monday as well. But, in the great scheme of things, we also continue to watch the stock market and the overall health of the economy, which has gotten a lot more optimistic tone here in the last 10 days or so. So that's good news. And I really don't get the feeling that demand is going to fall apart for beef anytime soon. We had export sales today. They were almost identical to what we saw last week. So, we'll see. As far as the pork are concerned, I mean, look, we were stronger earlier. We are barely holding on to unchanged now. This is kind of a dead cat bounce. It doesn't give you a good feeling about that chart changing directions from this near-term correction that we've been in. Export sales didn't do anything to help that. Nearly, again, identical there, too, as far as what we saw last week. So, I don't know. You'd really like to see a higher close in hogs today. If you don't get one, I don't think that's a good sign, Tony.
All right, Ted, thanks for dropping by. We'll see you back here on Tuesday, and he'll be on the radio tomorrow for Commodity Wrap. All right, that's where we're trading as we start the morning.